Investors like Michael Bennett are still reeling from their shares tumbling.
It certainly hurt. I was watching the shares go down in value, but with this sort of thing, you have to kind of just stomach that.
Michael's held DroneShield shares for a number of years. The company supplies foreign governments with anti-drone technology, currently used in the Ukraine war.
When I started investing in it, it was 8 cents a share. It was massively undervalued. The whole company was worth about $13 million at that point in 2020. And they were publishing some good results.
DroneShield shares have surged more than 200% this year, but the stock plunged 30% in a day when the CEO and others sold their holdings.
Overall, retail shareholders have been very happy with DroneShield in the short term.
On the 4th of November, the company released more than 44 million performance stock options to staff after hitting a milestone of $200 million of cash receipts within a 12-month rolling period. The next day, it said 31 million shares had been issued in line with the Corporations Act. CEO Oleg Vornik received 15 million performance options and turned 14.8 million into shares. A week later, DroneShield told the market he sold all of them for almost $50 million between the 6th and 12th of November. The chairman, Peter James, and director, Jethro Marks, also sold out for more than 17 million between them. Experts say sales like this can affect investor confidence.
There's nothing illegal, but I think that there should be a window to prevent directors selling out the bulk of their shares, or a very large proportion of their shares, so soon after an announcement.
DroneShield told the market the share sales by the CEO and others were unrelated to the growth trajectory of the company, which it said remains strong, as highlighted in the recent quarterly market update. Directors also retain a stake in the company through vested options. But CEO Oleg Vornik holds less than 200,000 vested share options out of the 15 million he was awarded.
It is within their rights, given the system we have. And if we want to change that, we need to change the regulations.
And I think that companies in this situation can get on the front foot and really explain and communicate why those shares were sold and why the CEO and the directors have confidence in the strategies.
Smaller companies like this might find themselves in the top 200 stocks on the ASX after a big share surge, attracting more money from exchange-traded funds as they seek to track the ASX 200. A big share sell-off can then force them back out of that index, attracting more selling from exchange-traded funds that may exacerbate those losses.
This isn't a playground for innocent investors who've had no training or experience of high-tech stocks.
The old adage applies: with big risk comes big rewards, but the opposite's also true.